Welcome back to Squawk Box. Washington Federal ringing the NASDAQ opening bell this morning, celebrating 100 years in business and the recent acquisition of Anchor Bank Corp. Let's bring in Brent Beardall. He's the CEO of Washington Federal. Good morning.
Good morning, Andrew.
So 100 years. Can you believe that? You haven't been there the whole time, though.
I don't look a day over 90, do I?
You look good. Let's talk about the world of banking, small banks these days, what's going on in Washington and how it's relating to you. Which is to say, how do you think that the changes in Dodd-Frank are going to impact the sort of smaller and medium-sized banks in the country?
You know, everybody thinks Dodd-Frank, let's just roll it back, let's get rid of it.
Right.
We're not in favor of that. We need regulation, we need good regulation, we need effective regulation. The problem with Dodd-Frank is you have these arbitrary limits. So it's based on these arbitrary thresholds, whether it's $10 billion or $50 billion. And from our opinion, it needs to be based on risk. How much risk is a bank taking?
What is it that you can't do today that you want to do? Meaning clients that come in, or potential clients that come in that you wish you could either lend to or do something else for, that you say, you know what, I'm really sorry, we're just not in a position to do it.
Oh, well, frankly, we're pretty conservative. You know, it's what's allowed us to make it 100 years in business. And there's not a lot that we can't do, but what we'd like to do is be able to take more of the resources we dedicate to stress testing, for example, and put those towards our investors and our clients.
How much does it cost to run the stress test for a bank your size?
You know, for our size, it's a couple $1 million.
A couple $1 million
oh,
a
yes.
year?
Oh, yes.
So right now, and tell me if I'm wrong, you are at about $15 billion, which means you're above the $10 billion threshold for stress tests, but you're below the next threshold.
That's
of
correct.
$50 billion.
Correct.
So does that mean that you could pursue some acquisitions?
Yeah,
More acquisitions, or be bought? I mean, how do you think about that?
Certainly, you can. In our history, we've been around for 100 years today. April 24th, 1917 was our inception in Ballard, Washington, and we've done 20 acquisitions since going public in 1982. And acquisitions can be a great thing, but they can also be a terrible thing. So you have to be very disciplined in what you do. So if it were up to us, our preference would be to grow organically and not do more acquisitions.
How do you think about the big banks today? They've basically been out of the M&A game for a very long time, basically since the financial crisis.
Yes.
Do you think they should be able to buy up banks like yours? There was a period for several decades where a smaller bank the business model was for Bank of America to buy you.
You know, I think the 10% deposit cap was put in for a reason, which was a good reason, and we all looked the other way as some of the big banks went beyond that. And I think too big to fail is a real thing, and I think we need to do more about it. So no, I don't think the big banks should be able to acquire institutions at this point.
And when you think about the other piece of this is in terms of lending, you've heard President Trump make the argument that there's not enough money getting out to people who need it. Small businesses that aren't getting the money. There's individuals who can't get the money. Is that your experience or no?
You know, our experience is that people are out there looking for the money, but there's so much regulation to get the loans, right? If you look at mortgage loans, for example, and we are a portfolio lender, meaning every single loan we make, we keep on our books, which is unique to us. But if you go and get a mortgage loan, you have about an inch of paperwork that you have to fill out. And people are saying, wait, what am I signing? They don't understand it. And every new regulation that CFPB puts out there is intended to try to make the regulation better or make it easier for people to understand, but more is not better. In this instance, we think less would be better.
So Washington Mutual was already taken. That was a name you didn't defunct. You figure Washington Federal's better? I wouldn't want anything even with one name the same as Washington Mutual at this point, would you?
Yeah, well, that's a very good point. We've thought of that, but we have 100 years of history behind us, and we have served our clients so well in the Pacific Northwest.
Sounds better than me. If Federal sounds like maybe you'll be okay because it's not.
Well, the other thing, too, is if you think about our capital position, we're one of the strongest banks in the country.
There you go.
If you look at our capital
message,
ratio...
I like it. So you golf, right?
I try to golf.
Someone gave me this.
Jasper, take you off message.
No. You play at Aldara?
Aldera, yes.
Aldera?
Yes.
This says lost by Brent Beardall. Do you have balls that say lost by Brent? The weird thing is this was found before the ladies' tee on number 6. Is that possible that?
You know, I can neither confirm nor deny that is one of my golf balls, but in all likelihood, yes.
So it's another Brent Beardall, but before the ladies, it was in the rough before the ladies. Did you have a mulligan or what? Maybe it's from another go. It might have been from another hole. Might have been from another hole. You did it so far. Okay.
I do have a slice. There's no doubt about it.
Breakfast ball. Brent, Thank you.
Thank you very
Happy
much.
100
You
years.
pay Brent good for stuff like this.
We-
I mean, yeah,
that's why
maybe
we
you're
pay
gonna think
him.
about twice about this.
What an opportunity to have Mr. Good. Thanks for having us on this.